Hey guys, good evening to everyone in Asia and good morning to those that are from the European region and in North America. For this video, I want to give you an update on what's happening in the crypto markets because again, we're seeing some downward volatility. As of the time that we're recording this video, Bitcoin is currently at 33,240 and is currently moving within this particular range. But before I go through the charts and before we go through some other cryptocurrencies and tokens, I want to give you the narrative on what's currently going on and what's currently pushing the drop that we're currently seeing here. I want to talk about China and I want to talk about the hash rates because that greatly affects Bitcoin, and as it greatly affects Bitcoin, all of the other altcoins will be pretty much affected as well. So please remember this, that everything rises and falls on how Bitcoin will go, Bitcoin being the dominant alpha in the cryptocurrency market space. How it goes, how it moves up, and how it falls will greatly affect the cryptocurrency market as a whole. So, that being said, this is what I want to zoom in and talk about first. That please do notice that all of the downward movements that we're seeing right now is basically because China is off to shut down 90% of Bitcoin mining capacity. So please remember, a large chunk of mining that we're seeing globally is happening in China. And what it does is, if you shut down mining, it will massively hit the hash rates. And for those who are asking, why is the cryptocurrency market down? It's, in my opinion, mainly because of what's happening in China and the mining ban. And please do note this, that um, all of this is fear, uncertainty, and doubt. But for those who are in it, for those that want to enter the cryptocurrency market space, or for those who are in the cryptocurrency market space, please do note that things like this is part of what we signed up for. The fact that it's new, the fact that there's still a lot of government regulations that uh, are not so favorable for it, you would possibly see swings like this every time there would be disclosures that are somehow bearish in terms of news. Now, out of the 26 firms that have been inspected, there a lot of those mining operations, which at least from some portions of China no, are hydroelectric related, have been forced to shut down. And I think one of the biggest issues in this is that a lot of those companies are planning to move out of China, but the problem is it would be hard for them to, number one, look for a place in order for them to be able to transfer with that amount of capacity. And not just that, to be able to move that large amount of hardware to another country or another region would also take some time. So, in effect, no, this would somehow hit and this would somehow damage the hash rate that has been that is being produced. So please do remember this, that uh, as the hash rates go down, it places a more bearish tone also in the markets. And Bitcoin's hash rate has hit a 6-month low. Um, so if you try to count it from the start of the year to where we are right now, it's one of the massive lower points that we have seen for the hash rate of Bitcoin. And when that happens, specifically from a purely day-to-day standpoint, that's when we've seen some large downward moves for Bitcoin. And as Bitcoin continues to push lower, so as the other cryptocurrencies will follow as well. That being said, this is where we are right now. So by the time this is being made, we have a large red candle still right now dipping, towards somewhere around the 32,000. It's currently at the 32,777 mark. I think the main support right here, as what I drew in previous videos, is around the 31,151 mark. If you'll zoom in using a 4-hour candle chart, 4-hour time frame, you will actually see this, that you have a massive downward slope after failing to break this particular resistance line at the 40,781 mark. So the reason why I'm saying this is that whatever downward movement that we're actually seeing is also a byproduct, above and beyond what we're seeing in the news from China. It's also a byproduct of it failing to break out from the 40,781 resistance And right now, I guess what's very very important is for us to actually see that this support level at the 31,000 mark is something that will hold, because if it does not hold, then there may be additional downside. There may be a larger downward movement if this particular sideways range, this particular sideways trend does not hold. Using the 4 hour time frame, we're currently below also the 25th, the 7, 25, and 99-day moving average. I just want to adjust this first. Allow me to just adjust. I normally also use and check the 20-day, the 20, 50, and 100-day moving averages. No? So just to have proper context for everyone, that we use longer and stronger time frames also for this. So allow me to put these all together. So you have right now, no, using the 4 hour time frame, Bitcoin is down 20, 50, 100, 20, 100, and 200-day moving average. And if I move back to the daily candlestick, you will see right here, it's pretty much lower. It's pretty much below the 20, 100, and 200-day moving average. And all eyes, in my opinion, will be at this particular support level, because this will either confirm if we may see more downward action, or we may just see it consolidate in this particular lows. And that being said, also, I just want to reiterate this also further, that even Ethereum, which is again the second largest cryptocurrency, is also following suit on what's happening to Bitcoin. However, I just want to mention this, that if you look at it from this perspective, the difference between Ethereum and Bitcoin is that it's dipping below right now this level of support, which I pegged earlier at the 2,113 mark as well. What's different though when you look at Ethereum is that you still have it above the 200-day moving average, which is around the 1,871 mark. And if I just continually zoom in, looking at the 4 hour chart, it's still, we're now at the second candlestick, it below the 2,113 mark. If I zoom in even further, early candlesticks, we are now 1, 2, 3, 4, 5. We are now 5 hours way below that level of support. So very, very interesting to see how this will progress, because as you all know, if it does not go back above that 2,113 level, then we may see some possible retracements further. But speaking of retracement, a possible area, in my opinion, where it could possibly retrace is somewhere at least close to the 200-day moving average, which is at the 1,865 level as of this point in time. And I just wanna note this also. Above and beyond, it's below the 20, 100, and 200-day moving average. If you plot this together, it's forming already a downward slope. So it's so important to watch how this support line here at the 2,113 mark will flow, because if it doesn't, you already have highs that are sloping lower. So Bitcoin still within its range. Ethereum, first daily candlestick chart breaking below the 2,113 level. Looking at XRP as well, this is where XRP is. XRP, as you can see right here, is also following almost the same progression as what Ethereum is, in terms of having a downward slope right here. So you have that, and if I'll try to, sorry, oops, there you have your downward trending slope right here. Let me fix this first. You have your downward trending slope here, and if you'll allow me to add at least another level of support and resistance, this is a current resistance for XRP, which will entail itself as a level of support. You have that around the 0.64 mark. What's protecting XRP right now is the 200-day moving average, which for the first time, if you notice it right here, it has gone below it from at least a daily candlestick point of view. So what's so interesting is we want to see what happens here now, because if it breaks past this, or it bounces above the 200-day moving average, then we might actually see it go above this downward trending slope. But all eyes still, in my opinion, will be here, 1.04 mark, where the 100-day moving average is. it needs to actually successfully go out above and break out from that for it to actually to see it to have a sigh of relief that it's actually out of the downward trending slope. But a couple of things to watch out for: the 200-day moving average, will it stay above that level? The 0.64 level of support, and then the resistance at the 1.04 mark, which is where the 100-day moving average is. I want to talk about maybe BNB also, because we've been tracking the price of BNB also for the past weeks. This is where BNB is. It's currently at 339. Same narrative for BNB and Bitcoin. You have your resistance right here at the 432 mark. Then you have your support right here at somewhere around this level. So it's still pretty much consolidating in its normal range. It's just that it has not really broken out of the 432 resistance level, and you have it below already the 50, the 100-day moving average, and also the 20-day moving average. Main support level right now is at the 255 mark, which is evidenced by this as a level of support when we saw the market drop past May 19, and it's also where the 200-day moving average is. Now I want to talk about Dogecoin. This is how Dogecoin is right now. I think Dogecoin now has dropped a significant chunk already from its highs of around zero point 0.7 just more than a month ago. What's interesting though for Doge, also from a day-to-day candlestick perspective, is that it has broken below the 100-day moving average right now. And if you'll allow me to put this line right here, you have your support level there, which it also broke. Another line, another level to add for at least Doge is you could put it somewhere around this area, which is around 0.24 mark, and we have the candlestick somehow making setting there. And if you zoom out right here, it hit that level March 23 and bounced. It hit this level March 19 and it started to bounce. And we saw some consolidation around this particular level at sometime around sometime around May 2021. So this is something that has proven itself at the very least for Doge as a level of support. So allow me to put RSI in also as well. So as you can see right here from an RSI perspective, we have the 30 oversold level. Even for Doge, it hasn't really crossed below that level yet. So I want to compare. I forgot to over at least show you this for Bitcoin. Um, so for Bitcoin also, as you can see, it really hasn't dipped below the 30 level for RSI. Then let's look at Ethereum as well. So for Ethereum, let's see how this is going for Ethereum. So for Ethereum, same thing. It really hasn't hit oversold levels yet. And let's look at BNB. Okay, so so there, if you see there's a level of consistency. Sell downs are happening, but it hasn't really hit a point similar to what happened mid March, where we saw them being sold down, but also hit oversold levels. So it's near oversold, but not yet really in an area where we could say that they're pretty much oversold already. I want to look at ADA because a lot of you guys also own ADA and have been requesting about ADA. ADA is also not yet oversold, but it's breaking down below the 100-day moving average. It's also below the 20-day moving average as well. It's If you'll allow me to put a support and resistance here for ADA, we could put a line somewhere around this area, which it already has broken down from. Then we could put another line here. So we could put another line here, which could act also as our level of support somewhere around this particular area. So you have it currently breaking down from the 1.47 area, and you have it also starting to break down the 20 and the 100-day moving average. And what's so interesting about that is that the one US dollar level of support coincides also to where the 200-day moving average is. So let's see how it progresses. It's still not also in current oversold levels right now, but a strong level of support, at least for ADA right now, is at the one US dollar mark. Now, I want to go back to Bitcoin. A lot of people have been mentioning that it has room that should a breakdown happen, it could go back to around the 20,000 mark. But let's look at it from at least from a tech standpoint as well. So if I'll plot a certain line here, you could see it from this particular level that this area is a level of a previous resistance, and that previous resistance will function as a level of support should sell downs happen. So that being said, you could peg that right here, and then you have another one somewhere around here, around the 19,000 mark, which could also be a level of support. So please do remember in technical analysis, previous resistances become levels of support as well on the downside. So these are possible retracement levels as well. 24,321 from this particular resistance, it becomes your next retracement level. Then you have this area at somewhere around the 19,890 mark, so close to the 20,000 level. So again, all of these downward movements are contingent on what happens to Bitcoin as it follows this level of support. Before I end, I want to talk about PancakeSwap. I know a lot of you guys have been also asking about PancakeSwap, so let's add PancakeSwap to the mix. This is how PancakeSwap looks like right now. It's not yet oversold, but if you'll allow me to at least draw the lines here, your level of support, at least for PancakeSwap, you could peg it around 12.935. Then your level of resistance for PancakeSwap, you could put it right here at somewhere around the 21.19 mark. So that's a current consolidatory range for PancakeSwap. It's almost similar to how majority of the alts and also Bitcoin is moving. And um, the entire narrative into all of this is that um, watch the news that's coming out of China, watch how the miners that have been disrupted, how they will pivot, because we really need those miners back, because those miners will further increase the hash rates once again. So please do note that this I guess that's the biggest advantage of the stock market versus the cryptocurrency market. FUD like this is not present in stocks, but it's something that we signed up for, and it's something that is part of the game. It's part of the volatility, it's part of the risk, especially that we are trading the cryptocurrency market that's so new. And I just love it. It's just so interesting, especially for my trading portfolio and also my stacking portfolio, seeing movements like this. And it's so interesting to be part of of this as compared to 5 6 years ago when I was not in the cryptocurrency market. I was just merely a spectator. But it's nice that I'm not just merely seeing the headlines, I'm not just merely seeing the news, but I have skin in the game. And it's really, really different when you have skin in the game, in whatever asset class you're putting your money on. And it will always go back to what your trading plan would be when you are trading the market. So for those who are following strict technicals, very, very important that very, very important to note that once we see it get out of this range, you must act. Either if it breaks out and reverses, which becomes a signal for you also to add or position, or if it breaks down and we see downward slides, which should be an area for you to either avoid it completely, or if you have positions, it could be an area also for you to sell even if it's at a loss. Or for those who were holding on to it for a longer period of time, this could be an area also for you to take profits. So there, I hope that this is something that was insightful and relevant to all of you, especially right now. And that's a commitment that we have in this channel. We're not just going to talk about crypto when times are good. We're going to talk about crypto even when there's a bunch of selling that's going on in the markets as well. And please do notice that whatever we talk about here, this is not financial advice. Please do your own due diligence every time you trade, every time you invest, every time you decide. The worst thing that you could ever do is to buy, sell, hold, or avoid a certain token or coin just because you hear it here in YouTube. Don't ever listen or decide just because you hear it off your friends, you hear it off other people, or you hear it off YouTube. It's your money, it's your responsibility. Please take the time to be able to double down and learn more about this, because nothing beats taking the time to learn. Nothing beats taking the time to be able to study and do a deep dive in all of this. So that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.